WTI futures opened the day cautiously higher, largely due to news reports about easing debt concerns from China and Evergrande that was enough to spark a global rally in both equities and commodities. Add on top of that the consensus belief that there's been a sluggish return of refineries down in the Gulf Coast, and presently, as of yesterday, 16.6% of the refinery capacity is still offline, although a lot of people continue to say that most of that is due to last week's tropical storm Nicholas that hit last week. On the other hand, crack spread hit a 4-week low early this morning. Textbook would say that that's bearish for WTI. Later in the day, the rally in WTI extended on a mostly bullish EIA report. Crude inventories hit a 2 3/4 low. They drew 3.48 million barrels. They were expecting about 3 million barrel draw. Distillate supplies down 1.45 million, more than expected. Cushing crude supplies were down 1.48 million barrels. On the other hand, a negative, gas stockpiles unexpectedly rose 3.47 million barrels versus expecting a 1.47 million draw. So with all that said, 5-year average, according to EIA, crude inventories are 8.2% below the 5-year average. Gasoline stocks are down 2.4% the 5-year average. Now going on to CME Group CVOL and looking at November options, looking at it on a 1-month basis, volatility is in the 70th percentile. Looking at it compared to a 3-month basis, it's only the 45th percentile. November at the money volatility slightly lower. Both the up variance and down variance are down quite a bit, but down equally. So skew is basically unchanged on the day. Now looking at November options and the flow that I've seen, November 72 and 72 half calls. On the put side, the 69 half and 70 puts.